that happen in the market. Now, if your account is not protected with the use of stop loss, this is capable of wiping out someone's account. That's why you just have to make sure for every setup, always have stop loss. Always have stop loss. It's very, very important. Because you cannot predict what can happen next in the market. Once you have, put a stop loss. This is about how many pips collapse is this? 5,000, 60, 50, 60, 49, let me see, 49, 60, this 1,000, then 4,860. Did it get up to 4,860? Okay, almost 2,000 pips. That's a lot of movement in the market. That's a lot, and it happened within 30 minutes. This 15 minutes, see, 1, 2. So you should always have stop loss. Never find yourself in a situation where the market wipe you away. Where is that our GBP USD? Let's see what happened there yesterday. Where was our entry? Okay, this is our entry. Not this one. No. Our entry was somewhere here. Our entry was somewhere here, right? It got to TP1. No. He hit stop loss and I went to TP1 and came down. So he didn't hit stop loss and take profit first. Excuse me, please. Please pardon me. You should know that I'm a pastor. All right, so our setup failed, but he hit take profit 1 before it went down. So now, if you are looking at pounds now, what do you think we should be looking for? I know. Look at pounds. Look at the chart. Try. Look at the chart now. What do you think we should be looking for with this structure you are seeing? Try. Yeah, it's sell. I have a lot of ladies that are doing some very crazy figures. So you should be one of those ladies. Yeah. Ladies are more patient. I think I've mentioned this before. They are more patient. Their trading journey will be conservative, but they are consistent. They may not be turning 10,000 to 100,000, but they will be very consistent and be making decent money and be living a decent life. Naturally, by proxy, more ladies are more patient in following process. It's men that want to jump gun, and it's not our fault. It's a responsibility that lies on our shoulder. A lady can do demo. If you say, lady, do demo for 3 months, she will do it. But if you tell a guy, do demo for 3 months, 1 week, you want to go live. So if you look at GBP USD, what we should be looking for would be a sell, because we are seeing an ideal higher, lower high, lower low. We are seeing a structure coming down. We should be looking for a sell. So if you are looking for a sell, you are not looking for a sell at the low. You want price to pull back to a very decent area where we can now begin to look for a sell. So this is our our anchor time frame. So we now move to microstructure to go and look for a sell. So right now we just need to switch. We can see if you are, let's say you are using SMA, simple moving average. You can see that the buy that is coming now is approaching the 20 and the 50, but that is not what you are looking at right now. What you are looking at is to go to your microstructure and see if you can begin to spot areas where your sell can come from. Now, who can tell me where price will most likely break and then you won't be thinking of sell again? GBP USD. This area you are seeing, they are all sell areas. Look at all these areas you are seeing. They are areas where price will get to, and then you should be selling down. This area you are seeing like this, they are areas price should pull back to, and then you sell back. However, if price breaks above this high, then we are now considering buy. Does that make sense to anybody? Because this is what we have been repeating over and over. However, this area, they are all sell zones. Yes, lower high. So if we want to sell, even from your anchor time frame, when you check, look out for key areas where you can sell from. This is 1, this is 2, and then this is 3. So if I'm going to sell today, I will be looking for sell where price is now, or I look for sell here, or I look for sell here. This area, this area, this area. Samson, can you tell me why I am looking at this area, this area, this area? And then I'll now ask if anybody has seen something else, another area where you think we can sell from. If I'm going to sell GBP USD, I will look at this area where price is now. So I'll just wait for some confirmation. This area or this area. So can you tell me why? Do you agree with what I've said?
Yes, I agree, sir.
Okay, so why do you think this area, this area, this area are good for shorting?
For short and sell.
Shorting. Short means sell.
Okay. They are good for selling because they are areas that are very, very, they are key zones. They are areas where price got to and rejected. And for example, we can see that, let me just touch.
Yes, come and touch.
We can see particularly that this particular zone here, they are doing equal lower highs. lower high, equal lower highs here. So they are very, very important key zones that we can short.
Okay. Is it correct? What he's saying, does it make sense? It's making sense. So if this price here, if I go to microstructure, this price doesn't reject here, then I should wait for it to get here. Then this is the next position. Who is saying something else that I want to add to it? Or who is saying something else like, okay, I'm seeing a buy instead of a sell? Definitely, there will always be a buy, but it's advisable you sell. Why? Because of the trend. You don't trade against the trend. Yes, sir. Yes, the bullish candlestick.
Break out now.
Yes.
Is there no possibility before hitting the next key zone
Yes.
to drop back?
It can. And you will still find yourself. That's why we move to microstructure. From microstructure, we now start looking for a change of direction.
Okay. Okay.
So here we are not executing here. We are only looking at areas where we can see setup. So even if it cross this line and then it gets to somewhere here, like I said, this entire area, they are sell areas. They are sell positions. These areas they are good for selling. But we need to go to a lower time frame to now fine tune our entry. Do you understand, sir? Yes. So even if we leave this area, then come back here to retest this area or move closer, not getting there, and then we see on a lower time frame, we see a change of character. Where it's no longer, because if we switch lower now, we should be seeing it doing higher, high, higher, low. Small, small, higher, high, higher, low. So can we see now? Look at the low here. So we'll be waiting for it to now start changing direction. We'll start seeing it doing lower, low, lower, high. Lower, low, lower, high. Then we'll find our entry. But right now, it's not a good time. It's not a good time to enter until we see a very clear, a very decent condition. But one thing is this, we could see here that this area is an area that it has been rejecting. So Anna is in that area. If price right now fails to break through this area, and then let's say it's looking like it's breaking it, it fails and then returns lower here, then we should begin to look at ourselves, look for ourselves. So the first short-term sell is from here to here. Then the next leg is here. Because this area also is very important. This low we are saying, you can decide to come here, do equal low, and then go back. Every area of rejection in a trade is very important. Don't joke with it. You may think it will go lower. It will go back there, retest it, and then use it to push higher. So that's why for every key area you get to, take part of your profits, lock the trade, and move on. Take profits. For me that scalp a lot on gold, what I do is that when price gets there, I close my trade. I allow it to break below. It breaks below, it retest it, I enter again. Then we go to the next leg. So what I always do is if I'm picking a trade here, when it gets here, I come out of the trade. I wait for a full breakout here. Then I continue. What I mean is this. So let's say I sell here to this point, I take profits. If it breaks below, then I allow it to retest it, then I take it again, then I take it to the next place. So I will have two entry. I enter here, take profit here. If it breaks, I enter again, then we take here. We take the second profit here. So, but in this GBP USD, it's not safe to be looking for a buy. Except from here to here, it's quite a distance. And there's no harm in trying. Yes, like I always say, don't be afraid to pick a trade. Yes, don't be afraid to pick a trade. Go in. But go in with a good risk management. So you'll be able to go again. Don't go all in. If I go in here and I go in with 1%, I should be seeing like 2 to 3. So why can't I risk it? So instead of waiting for price to return, then before I now start looking for sell. As a day trader, as a scalper. So I will try it. Maybe we'll try it. Let's see if it's going to break out fully. And we try long here. Let's see if it will break out. Let's see what's going to happen in the next 10 minutes. Let's look at the next 2-3 candles and see how it's going to react. Maybe we try it. We try a buy. We put our stop loss here. We take it here. Then if it rejects, we enter sell. We take TP1. We take TP2. So just like I said earlier, always ensure you have a stop. Don't allow the trade use your capital as stop loss. Yes, that's very dangerous. Using your capital as stop loss. Because you won't know when this kind of collapse will happen. Look at our key zone. He shattered it without even resting. He came there, bounced on it. He bounced on it, went back, and then collapsed. Without even resting. It just went. So those who were having pending order here without stop loss, they are gone. I saw so many accounts on X yesterday. And it was very, very brutal. So we just want to practicalize again today, just like we did yesterday. So you have your account, you want to analyze. We have analyzed GBP USD. So we are waiting for our structure to fully form. Then we'll pick the trade. Let's look at another asset for today. I don't want us to look at gold. Let's look at something else. Let's look at USD JPY. That's another here that people trade. USD JPY is beginning to show us something very interesting. Can somebody guess what USD is about to do? David, look at the screen. And can you tell us what USD is about to start?
It's about to start a bullish trend.
It's about to start a bullish trend. Yes. So at what point can we confirm the bullish trend?
The point where we can confirm the
Yeah,
bullish
you can
trend
go and
is-
touch it. Go with the mic. Give me a reason why you feel that it's about to start a bullish trend. And then at what point can we confirm it?
What I said is about this because it was doing a bearish trend from this point.
Sorry, this is 4 hours. Okay, so let's listen to David. Let's see if he's not correct, we say he's not correct. And if it's correct, we say it's correct. Okay, yeah.
It was doing a bearish trend from this point when it came down here and it started consolidating from this point. Then as a trader, we know that when the market is already consolidated, we have to wait for it to start a new trend. Then from there, it started a new trend from it that it was going up. And if you want to know if it's going to be a bullish trend, is if it comes up and break this previous high.
Is David making sense? Is it making sense? Okay. So they said you are missing one thing. What is he missing? Who can help him? Yeah, you have tried. Yes.
It was doing a bearish trend.
Yeah, use it so that people can hear you.
Okay. It was using a bearish, it was on a bearish trend before. Then at this point started consolidating, and if you notice, got to like this
Equal low.
low. So our next 3 candles is showing that okay, it's about to break on a bullish. So for us to know whether our prediction is right, we have to go to the lower time to know whether we are getting a higher low and higher high and higher low. That's how we get to know whether and pick our trade from lower time. Whether it's
So is it the right time to go for a buy yet?
now.
Yes. Okay, it's not the right time. Okay, who has an objection on that? Can it still collapse?
Yes.
It's possible.
Yes.
Possible that I can see
The consolidation right here where it is. It's possible it continues and then break lower. So one thing is interesting here. We are already getting an idea of how structure is. So many trading ideas here. So many trading ideas. This is 4-hour time frame. Before we can say this is a buy for those trading on a higher time frame, I'm telling you, it is when it crosses here. When it crosses here, that's when they can be saying, oh, I think we should begin to think of a buy. However, there could be a short uptrend here, from here towards here. Let's say 50% or 60%, because it can continue lower from there. Before you think about that buy, then it has to come out of this consolidation. There have to be an expansion, a movement away from the consolidation, then a retest to give you a higher low. There have to be a movement out of this consolidation. It drops to give you a higher low, and then you can take the leg high. I can tell you that it can still come here and then still collapse, just like gold did. Remember, if you remember that gold on our 4 hours, we were seeing a place where gold was rejecting. We saw that cluster. Where is it? Aha, look at it. You know, remember that area? This previous high here. Then it got to that area. He spent a lot of, I think 3 days or so here. Now it's collapsed. There's a probability for it to continue lower. So going back to USD JPY, going back to USD JPY, right now it's consolidating. There is no trading idea here. It's not advisable to trade here until there's an expansion. Markets come out of the consolidation. Then it does a pullback, and then you can now begin to ride on the trend higher and higher. So you now go to your micro structure to see the trend, movement. You know, when we were on 4 hours, we could see equal low somewhere here. This is the equal low. And now you can see that price is trying to go lower, but it keeps rejecting. This area is a serious key zone. So that rejection also is telling us that the buyers are protecting this zone. So if we have a movement out of this range, something like this, if we have a move out of this range and then we have a retest here, we can begin to buy upward. And that sharp movement out of the range has to be a candlestick with a full body. You don't consider the wick. For any breakout that is a confirmed breakout, the candlestick has to be fully bodied, not weak like this. It will come out with a full body and then it will do a pullback. Now, the pullback, the candlestick will be smaller compared to the elephant candlestick that will come out, green candlestick. In fact, if you want to know the area where there is momentum, look at the size of the candlesticks. They are always bigger. Let's look at the downtrend. Look at the candlestick. Compare the red to the green. Compare the red to the green. Compare the red to the green. You see that the red are looking fatter, bigger than the green. Those red candlesticks, you can see exhaustion in them. They are always, look at them, they are overlapping. Look at them. They are overlapping. They don't have strength. But if you look at the green candle, the red candle, you see the way, you see their sizes. Look at them. You can see the sell-off, see the pullback. See the sell-off, see the pullback. When we are going to have an expansion here, we will have good, healthy elephant bar, green candlestick. It could be 1, it could be 2, it could be 3. But they will be very healthy. Then the pullback, the red candlestick will come. They are active, but they are not in control. That's why they are small. Do we understand? Now, when this red came down, this green that came, that showed up here, what they are saying is we are active right now, but we are not in control. Then those who were in control stepped in. Look at the size. Elephant bar. This is an engulfing bearish candlestick, swallowing up the green. And then it did a follow through. 1, 2, 3, 4. So on USD JPY, we are waiting for a breakout of this range. But those who want to trade USD JPY, those who are already addicted to trading USD JPY, if they want to trade this area successfully, what they will just be doing is they will be selling within the range. But like I said, we have hundreds of assets to trade from. So why stick or get stuck with the one that is ranging? Money gets missing here. This is where we blow accounts. This is where we make losses most of the time. This is where losses come from most of the time. Even for experienced traders, they will have been trapped in the range they won't know. They will have been trapped in the range they won't know. Until they go back and go and do top-down analysis. Look at the overview of the market before the market has been ranging. So USD JPY, we wait for a breakout. A break to the upside or a break to the downside. In fact, I would prefer a break to the downside. Because it increased our confidence in the bearish trend that has been coming. But if you break to the upside, it can decide to change direction halfway. But then it will move. It will do a short-term buy until it breaks that high up. Then we can be thinking of a buy. Let's go back to our GBP USD because we need to trade something. Okay, so GBP USD is still in that zone. You see, it did as if it wanted to break it before. It came down again. Another candlestick is coming. I don't really have confidence in this candlestick because look at the way they are coming. Compare it to this one. Look at this candlestick. Look at it. It's looking healthy. It went down, but this week means that buyers pushed sellers away and took over. But right now, we are seeing exhaustion. Although right now, it seems that they want to start coming, but it's not yet solid. So we need that breakout with good candlestick. Then we wait for a minor pause, a retracement, and then we go higher. So my bias is both a minus buy, then a sell from this area. This zone here. Our sell from this area. This one. This one. No, yeah, we can't do that right now because we are in a sell and we are seeing bullish candlestick approaching that place. Now, what we are supposed to see is rejection And then we are supposed to see a bearish structure forming that I want to continue to sell. That's why we are waiting. But if it breaks out, that's when we are saying, okay, let us change our concepts to see if we can buy to this place. So let's wait for the breakout. Please allow me to take this call and then we'll continue. Just will you pause it for me? tempted to trade at a low. Wait for that pullback so that he can go with force forward. The fear is always if price pulls back and I enter, won't it go lower? When I started, that was the problem. So I want to wait for it to come back high before I now enter. So I will now find myself entering at high. Once in a while, it will work. It works when the momentum is very high, but most of the time it will fail. Most of the time it will fail. You see that area is a battlefield for buyers and sellers. That price is very strong. I will advise us to put a pending order, but I don't want us to put pending order. Just we did yesterday. If we put pending order, it can decide to fall. So what pending order are we looking at? Is it for a sell? If we are going to consider a sell, then we should see a very good push out of that area. Then we can now place our stop loss somewhere here. And then we sell back here. Then we sell further. Let's look at another asset. Which other asset should we look at? Which asset should we look at? Somebody give me an idea. Which one should we look at? AUD USD, okay. Let's try AUD USD. AUD is Australian dollar. My challenge is that they are almost of the time doing the same thing. AUD USD and ZND USD, they are most of the time doing the same thing. Now, on daily time frame, what is it doing? It's doing a pullback. All right? It's doing a pullback. Higher high, higher low. Higher high. Now it's doing a low. Right now. So let's go to 1 hour and see. On 1 hour, it's looking like you want to start a downtrend. But on daily, it's a bullish trend. How do you tackle this kind of trade? It's very easy. It's structure. This lower high here, just allow you to break it. That is, if you want to follow the bullish trend of the daily time frame, allow it to break this area, because it can get to this area and then start the bearish trend properly. Yeah. Yes, that's where no, it's not deceptive. That's where the real structure is. For example, now, what daily time frame is telling us about AUD is more precise than what 1 hour is telling us. Yes. What daily time frame is telling us is more accurate than what that 1 hour is telling us. Look at 4 hours. 4 hours is still telling us that structure has not shifted. is still bullish. Yes. In fact, 4 hours is telling us you can begin to consider a buy now. For those who will be using the SMA 50 to trade, is using the SMA 50 for a support. And this candlestick is what they call a pin back candlestick. And what happened is sellers came here and then buyers push it. So 4 hours trader, we say buy here, put your stop loss here. Buy at 70.74. Stop loss at 70.45. Yes.
Okay, it's an important.
Price came there. Sell came there.
Okay.
There, before, there was a red candlestick. But now, buyers stepped in at this area and pushed back the price up. So 4 hours is telling us that if you want to buy, maybe you should come in now. Let's go to 5 minutes. 5 minutes is doing already higher high, higher low, higher high, higher low. And look at 1 hour is telling us that, oh, change of character is about to happen. Okay, let's trade this USD. Let's use this 4 hour time frame. Let's buy. Let's try it. It's demo account, so there's no cause for alarm. AUD USD. So go to AUD USD. Lot size is 0.10. We'll put our stop loss below this low instead of here. You know, on 4 hours, this is where that low is. We'll use this low. Instead of this low, we'll use this low here. So the low is it's below this low, then below the moving average. AUD USD 0.10. We'll buy back here. We'll use this low here. Then we'll take it here. The reward is not much. The reward is not much. 1.5. It's not a good trade. Let's leave it. Is it not talking? The reward is not much. Let's leave the trade. Leave the trade. The reward is not much. The reward is not much. So if this trade works, it's giving us 1.5. So let's say you are risking $100. It's bringing 150. It's small. Yes. At least consider 2.5. Consider 2.5. That reward is not sweet. Can we see our GBP USD now? See what is going on there. Maybe we'll sell GBP USD. GBP USD. Maybe we'll sell. Let's try sell GBP USD. OJ, if you want to put stop loss, where are we going to put stop loss? Go and touch it. We want to sell GBP USD. Where are we going to put the stop loss? Touch it now. Even if you miss it, we'll clap for you. Oh yeah, go and touch it. Go and touch it now. Try. Try. We want to sell now. Where are we going to put stop loss? We want to sell. We want to sell. Where are we going to put stop loss? Where? Touch it. Don't be afraid to touch the screen. It doesn't shock. See, it doesn't shock. See, I can hug it. It doesn't shock. Yeah. Baba, no, let the people touch it and place your hand there. No, touch it and let your hand be there. Where? Samuel. He said here. So let's see. Samuel. Don't cross through the camera. Past the back. I know he's afraid that I should not call her. Let's say we want to sell. Let's say we want to sell. Where are we going to put our stop loss? Touch it now. It's not shocking now. Huh? Agba trader. Samson, come and touch where we put stop loss. We want to sell pounds. Where are we going to put stop loss? We want to try again. I know. No, you can't put stop loss here now. Samuel, you can't put stop loss here. See your entry now. See where price is. Price has to be above the high. This is above the high. Above 1.36300. OJ, you try, you get up. Only that you dey fear. Somewhere you didn't get it at all. How can you put stop loss at entry? You put stop loss above because we know that a break above this high means it's changing direction. Because see, it can still come back to touch that area again and still go down. So that's why you put it above. Oh yeah, GBP USD, open your charts. Let's sell. So you are entering twice. GBP USD, we are selling now, instant execution on TradingView. Come help me open it. Come help me put the paper money. So we put our stop loss here, and then this is TP1, 1%, then TP2, 2%. No, that one should be longer. TP2 should be TP2 should be 3%. Oh yeah, let's start. Okay, sell GBP USD 0.10 lot size. 0.10 lot size. Stop loss at 1.36300. 36300. 36300.
I did not do that one.
No, you first finish this one. Take you now do another one. Take profits. First take profit 1.3611. 1.3611. Sell. Then you now do another one.
Lot size 0.10.
0.10.
0.1.
1.36300. TP1 1.36 1.3611 1.3611. $1.3593. This is it here.
0.1.
Stop loss 1.36300. TP1 1.3611. TP2 for the second trade 1.3593. So this is how your trading setup should always be. Your stop loss should not be bigger than your take profits. TP1 1.3611. So set on your trade, put 1.3611. Then TP2 1.359 1.3593. So what we are doing also is to now practicalize how to enter trade, how to do the setting. Yes, sir. Gospel, please let me assist him. Aha. See, look at the board. Gospel has helped us to fix it. Look at our stop loss. Look at TP1 here. Look at TP2 here. So with 0.01 that we are using, if the trade goes against us, it will take out about $7 from our money. But if it goes our way, the first one we close at $10, the second one we close at $14. Profits. Does it make sense? That's how trading is. That's why once you do your analysis, don't be afraid to trade. Put it there. Close it and forget about it. The next time to go and check is after 2 hours or 3 hours. So in case TP1 is already taken, then you set break even for the TP2. Yeah, I will tell us how to do break even. So those online, I hope we are following and doing the same thing. There is no perfect setup anywhere. You must understand this. No perfect setup. So don't say, oh, my setup is wrong. Don't say, oh, he didn't analyze the market well. There is nothing like that. What you should not fail at is your trading psychology and risk management. That is what you should not fail at. If your setup is better than my setup and you have a bad risk management and trading psychology more than me, I will still be a winner more than you. I have a dope setup. So the reason why our setup is above that high, two major reasons. Number one, a break above that high means there's a change of direction. Our setup failed and we accept it with honor. Number two is that we are giving the trade room to breathe, just like what it's doing right now. Room to breathe. It can come back here and then collapse. So that space between our entry and the stop loss is the breathing room. The breathing space. You know, I explained that concept to you yesterday. The hedge fund, the institution traders, what they are doing here is that they are filling up orders. They are filling up orders. Just the same way we have already bet on sell. They too are also betting. Now, betting does not mean gambling here. It's probability. That's not so. When you hear the word betting, it doesn't mean gamble. It's not sporty bet. That's not what we are talking about here. How much capital do we have on this trading view? 100,000. Okay. But I hope everybody now know how to place trade. So this is how trade is being placed. You set your take profit, you set your stop loss, and you allow the trade to run. Set your take profit, set your stop loss, and allow the trade to run. Yes, you open two positions. So if this setup does not work out, and it breaks above, then we change direction. We will change to the opposite direction if it doesn't work. I actually saw that moving average before we placed the trade, but I just wanted us to take it. I saw this moving average. Yes, exactly. I saw that moving average, but I intentionally wanted us to take it. Yeah, it can still bounce on the yellow and then take off from there. So let's see if it fails or it works. If it fails, then we change direction. Any other question before we end to this? Then we'll meet again next week. Have any question? I think we can end for today until next week when we meet. So let's see what happens to our setup. So you don't understand them, right? You see, I'm saying that is a solid risk management. At least your risk management level should almost be near perfect. Such that if first trade fails, second trade gives you back what the first trade failed at, and then they also give you extra on it. So should this one fail and we decide to go long, we should be getting back what was missing here and even get more on it. Extra on it. If this trade works now, we get something here, we get something here. This 3-point-something%. $3.2. Why this one is 1%? So overall, we should be getting like 4-point-something%.
Wow.
And allow your trade to run. Okay, has it stopped you out? Has it stopped you out? Who else is still in the trade? It should have stopped us out. Now, let us now be looking for a buy, but not yet. Not yet. Let's look for a buy. How much did it take away from your account? By the time this candlestick is closing in the next 2 minutes, it can decide to collapse. You can't predict that. However, if we are going to consider buying now, we have 2 levels of support here. This support supports a buy. This moving average supports it. This swing low supports it. And then if the market now want to punish us, we will enter a buy. It will not buy, it will not sell. It will not start ranging. And can do another ranging like that for the next 2 hours. So this is where patience in trading also comes in. Because you get stopped out, does not mean you now quickly rush into that same trade. What you are doing is, they call it revenge. Yeah, revenge trading. This affects a lot of traders, including experienced traders. So it takes a very high level of discipline to be able to step aside when you are stopped out. Step aside and wait. Yes, it affects many, many people. Revenge trading. I want to go and get back what just took from me. Okay, since he stopped, I sold. He stopped me out. Let me buy. And now you are buying. You're already panicking again. Because now it's dropping again. So let's say, now, do you know what stopped us out of that trade? Anyone that gets it, go with 5,000, apart from gospel. What stops us from this trade? Quick answer. This trade that we pick now, anyone that gets it, go with 5,000. Because price has not gotten to where our stop loss is. I'm no more doing 5,000. I'm no more doing 5,000. Price has not gotten to our stop loss, but we are out of that trade. What stopped us out? No. What stop us out? What? You are still in the trade. Which broker are you using? Which broker are the others? Okay, they traded from. Oh, Meta Traders demo. You see now, different broker. What stops those that are already stop out? What stop you out was spread. Is the broker he's using gave him
Zero spread.
a tighter spread. Meanwhile, other brokers that are having bigger spread kick you out of the trade. That's exactly. And that's the advantage of trading with the right broker. The broker that don't have but he's still in the trade. The same trade, the same setup. Everybody has lost money. He is still in the trade because his broker gave him a better bid. I'm not going to advertise any broker here. We are online. So anybody that is interested in a better broker, they should check the link on our comment section. Have you sent the link there? They should send it. They should check the link there and register. So I won't mention the better broker because there are no broker is paying me for advertisements. So if any broker wants me to advertise for them, they should contact me. Then we'll discuss terms and conditions. So spread took some out while some are still in. So like I was saying, risk management. Another thing we'll be talking about over and over and over again here is risk management. Risk management is very important. There is no sure setup, but you can be sure of the position you are standing on. If you are even going to trade aggressively, make sure you can still trade 10 times before your money will finish. That means you have 10 trade and the trade lost before your money goes. But if you are going to trade conservatively, don't risk more than 2% of your capital, between 1 and 2. Look at what happened there in gold yesterday. Everybody can see here? All right. Look at what happened there. If I went all in with conservative account, yesterday, and I picked the trade from here, with 1,000, I'm almost hitting 20K with 1,000. No stop loss, no take profit until the market begins to range. If where your stop loss is 200 pips, reduce it to 0.5. If it is 100 pips, lot size 1, just go all in. No stop loss, no take profit, leave it for the day. Whatever comes my way, it is well with my soul. So the 1,000 is a sacrificial lamb. But you have other accounts where you are getting your daily bread from. Every week, 2% is coming, 3% is coming. You just flow with it. But this one is the one that if it happens, you are going to come back to buy like 10 acres. Once the money comes, because it's such, yes, once the money comes, you are just going to Eco Atlantic to go and buy one plot there and keep it. That's what they use such money for. It's not for spending. It's for generational wealth. So look at the trade now. It took people out and then start going our way. So our analysis was actually correct, but maybe we entered too early. You can still try. He said they should use, okay, we use the tight stop loss. Yes. Maybe we will have take it a little bit further. Okay, that stop loss was 7 pips. That's small. Yeah, we'll have used 10 or 15. We will have used 15. You know me, I'm using my gold mind to calculate the stop loss. You know, I told us that currency pairs and gold pip count, they are not the same. Currency pairs, 10 pips is like 150 pips in gold. 10 pips of gold is like 200 pips. You see this distance that is just 7 pips. If you try it on gold, it's like 200 pips. So I think that was what I used. If not, if I was conscious that was currency pairs, if I was conscious, I'll have said let's increase the pips to maybe 10 or 15. At least 15. 15 is a good size. So if you are trading currency pairs, your stop loss should be at least 15 pips. The smallest, at least 15 pips. Even if the high is closer, take it to at least 50. It's not bad. Because on a normal day, currency pairs don't move averagely between 70 and 120 pips per day. Averagely, 70 and 120 pips in a day. They do more than that sometimes, but averagely, on a regular day, between 70 and 120. But gold can do 500, 1,000. Averagely on a normal day. So I think that's all. Our trade is already moving, but only for Dominion that is still in. Apart from that, others we have been out. So let's leave it. Let's leave it. Then next week we'll continue from here. Thank you so much. God bless you.